Hello and welcome to our Gold Rush Daily today. And we are seeing quite some bullish sentiments here for gold. I think since Friday after the CME outage and the prices of gold and all commodities, actually all the metals, we saw the prices skyrocket. But specifically looking at gold, gold is sitting near 6 weeks high. If you look at the weekly time frame, it's almost really pushing up. If you look at the last 6 weeks, so that is about somewhere here. So these are from here all the way to it is. These are 6 weeks. So we might be able to see the price of gold really push up, right? So this is the daily time frame, and looking at the daily time frame, allow me to delete this setup. Or before I delete this setup, let me take you first of all to the 15 minutes time frame. So that I can show you how I was able to get my entry here for this particular setup. So this is how my entry was here. So I looked at this kind of price action. The price was creating higher highs and higher lows, right? So meaning it was an uptrend on the five minutes time frame. If you look at also on the 30 minutes time frame, what the price did here. So we had these particular BOS. So this was quite a good breaker as well. All right, this was a nice breaker here. So the moment the price breaked or went above this order block, so it became a bullish breaker block, and now the retest of this region is where I was looking at some entries. And what I did, I basically went to the 5 minutes time frame, whereby I was able to refine my entry, and I used the Fibonacci. So I took the fib from the highest here to the lowest to the highest, that particular point, and also the Fibonacci. You can see all those coincidence. All those confluences. So 30 minutes a breaker block, bullish breaker block, 5 minutes order block, and also the Fibonacci optimal trade entry levels, right? So, and that's why I was able to take that setup about 150 pips, but still I was looking at the price having the potential to come to these liquidities, the Asian liquidities now that has been taken out, right? So quite really a good setup. So let me now delete that so that we can be able to look at what I want us to look here. So when you look at the daily time frame, we had a setup. We had this projection here, right? We had this bullish peanut. And what we are seeing here is the price breaking above that particular peanut, right? So we see a break above that particular peanut. I want to delete everything here so that you can only be left with the peanut. So we see that particular peanut and the price has broken above. Also, we see the price. Also, this is the daily time frame. We anticipate these liquidities too. They have already been taken out. So on the daily time frame is basically what we are looking at is how the price is going to react once it takes out this liquidity. So the daily candle has to close because this is the daily time frame. So are we going to see a run or are we going to see a sweep, right? So when we come to the 4-hour time frame, then we are able to see also some good price action here. The price breaking that level, and therefore it means this is the level that we have the OP. So today I was looking at the price in the morning, maybe probably the price coming to this level. That is the buying sentiment or the buying level for these for gold in the 1-hour time frame. I mean in the 4-hour time frame. And when we come to the 1-hour time frame, this could be a really good, perfect entry to do that. Okay, but see what the price did. So these were the price closed on Friday, and the price opened up and pushed higher, meaning that the Friday's high was taken out, also creating a BOS there, right? And then now we see the price coming back to that particular OB. This is the 1-hour OB. I think also on the 30 minutes time frame, it's a very perfect one. On the 15 minutes time frame, let's see that on the 15 minutes time frame, yes, very perfect one as well. So we can see that. Okay, so I think even on the 5 minutes time frame, it's really a good one. So yes, so because this is the 5 minutes candlestick, all right? So that's a very good entry that we are looking at that particular point, okay? So that was on the 1 hour time frame. And now the price pushed up, right? So we had the price reject from that particular point. So now what are we looking at? What I'm really looking at is how the price is going to react on these particular levels here. We have already seen the price take out those particular levels, and so that is the liquidity level here. And I will be cautious now in terms we see that in case we see now the price push on the downside, I'll be looking again at this particular level. So if the price holds this level, we're still gonna see some bullish sentiment. But if it breaks below this level, therefore it will give us this kind of a pattern, right? This kind of a pattern, which is an M pattern. So once this level is taken out, so it will be the neckline, a retest, and we might see price coming to retest these OB here that was created on Friday as the price was pushing up. Okay, so but what I'm anticipating, if I look at the 15 minutes time frame, so what I'm anticipating, because we already have that, all right, we already have that. And actually, let me refine it very well in the 5 minutes time frame. So if you look at this 5 minutes time frame, what we are seeing is a series of higher highs and higher lows. So the first thing that I'll be looking at, I will come to this particular time frame. We have a BOS here as well. All right, we have a BOS here as well. So I'll be looking at how the price is going to react on these particular points. Remember, this is a good buying opportunity, but right now it's about past the kill zone time. Remember the kill zone time, the London kill zone has already closed. So what we are anticipating is the 7 a.m., which is the New York, around 7 a.m. when we have the New York kill zone. That's what I'll be anticipating. So let's see, maybe probably what the price is going to do at that particular point, because right now what we have is some bit of a retracement, because this is a retracement hour. So I will minimize it to that particular point, right? So I'll be looking at how the price is going to, in case the price comes to these levels, right? Because these are two levels. Even this one on the 5 minutes time frame, we have a BOS, and it's also a level that the price is likely to react to. But because they are close to each other, what I'll be looking forward is the price coming to this point, maybe probably by around 7 a.m. New York time, so that now I can be able to look for some buying opportunities. All right, that is for those who haven't traded the London session, because the London session has really given us quite some good moves here. So as per me, I'll not be trading the New York session because I've already attain my target for the day, especially with that New York session. And even if I'm going to trade anyway, basically I'm going to really minimize my risk. So these are the levels that I'm looking at, the price coming to this particular point here. This is an order block, so that now we can anticipate some more bullish prices. Okay, so if you look at the relative strength index, you can see short-term gold is really quite strong compared to dollar. If you look at medium term, gold is very strong compared to a weaker dollar. And even long term, we see a very strong gold compared to a weaker dollar. So meaning that now we are aligning ourselves in the bullish sentiment. So, and also if you look at the macros, what we are seeing is the dollar index being a bit weak. So this is the dollar index. We are seeing weaknesses in the dollar index. Okay, so this is the daily time frame. Remember, we had talked about at this particular level, the price respecting that level. So what I'll be looking here for the dollar index is how the price is going to react on this particular level. So once we see the price break below this level, therefore, we might be able to anticipate some even more bearish sentiment here for the dollar index, because what is making again gold really, because we are looking at a weaker dollar, therefore, which tends to support gold. Also, if you look at the dovish Fed sentiment, which is now we are talking about some over 80% chances of a rate cut this December, also which tends to support gold, right? And also we have a soft risk tone, especially based on the China's economic woes and geopolitical risks, which also underpin the commodities. And therefore, we see bulls being able to take a breather ahead of different US macro data scheduled at the start of this month. So what we are looking at is today ISM manufacturing PMI at 6 p.m. Also, we are looking at on Wednesday the ADP non-farm change and the ISM PMI at 4:15 p.m. and 6 p.m. Respectively. And then on Thursday, we'll be looking at the unemployment claims at 4:30 p.m. And on Friday, we'll be having the inflationary data, that is the core PCE price index, together the prelim UOM consumer sentiments and prelim UOM inflation expectations. So these are the macros that are scheduled for this week. Again, we are looking at these also being able to affect the prices of the dollar, which will also impact the price of gold. So the big question is that, are we going to see more bullish prices? More bearish prices for the dollar index, and maybe probably more bullish prices for gold. So that is the big question, whether we are going to see the price create maybe probably some other new all-time high, because we have some all-time high at around this particular point. That is should be 43.81 thereabout, right? 43.81. So that's about that 43.83. So somewhere there, that's why we have the all-time high. So are we going to see the price create or give us some other another all-time high? So that is what we are looking at. But for now, we are in a bullish sentiment. So any pushes on the downside, it's for opportunities to look at the buying opportunities. Any retracement we have on the downside, giving us some opportunities basically to be able to buy. So this level here, we can adjust it like that as well, because it's an order block based on this particular point. And then now we can come on the 5 minutes time frame and refine it further, right? Refine it further to something like that. Okay. So all these are key levels to look at some buying opportunities for gold. So mark them. Let's watch how the New York session is going to be. Remember, the Asian session has already been taken out during the London session, which insinuates that we are likely to see the continuation of the trend come in the New York session, that is the buys. So maybe right now we might anticipate some dips, and in those dips, guided by the levels that I have drawn there, that's how you'll be aligning yourself in terms of selling opportunities, right? So with that, I mean in terms of buying opportunities. So basically, it's being able to follow the price. So in case the price pushes up again and creates a BOS here, therefore you mark the order block that will be created there, and that's how you're able to follow the price and also be in a position whereby you can be able to take entries. Okay, so this is the month of December. Of course, we anticipate less volatility as we approach Christmas, and it's good to ensure that you trade with cautious. Market might have a lot of manipulation. Remember also, it's the month that on the yearly candlestick that maybe probably we're gonna see power three. That is we have the open, the close, we have the highs and the lows. That is in terms of the week. So again, it's really a month that you need to approach the markets with a lot of cautiousness in terms of risk and everything. Okay, so I wish you all the best in this particular month, and let's see what we will be able to get maybe probably before December 15th or 19th thereabout. I think that will be my last trading day, maybe 19th, 15th or 19th thereabout, and I will be off now until until January 2026. Okay, so thank you, ladies and gentlemen, and have yourself a wonderful day ahead.